Is Bitcoin preparing for a bounce? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you all have an amazing weekend. In today's video, we're going to be taking a look at Bitcoin's price action on the short-term and daily charts, going over the likelihood of a bounce, how high a bounce could take us, the key levels of resistance we need to break above, and even the probability of a continuation toward the downside. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If you're interested in more of that kind of content, join us on Telegram. That will be the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, you can join our VIP group. We have over 600 members. We post trading setups of the exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to a multitude of group chats, the general chat, the trading chart and education chat, the help chat, the news chat, the trade setup chat, and of course our daily video chat. If you're interested in getting access to all of that, go ahead and contact me in the pinned comment of the free channel for more information and to view our entire trading track record. With that being said guys, let's dive in. Starting on that market data, how are we looking for today? So obviously over the weekend, it is pretty common to see volume and volatility drop off. With that, we've seen a 50% reduction in 24-hour volume, sitting at a total of 58 billion. With that, 24-hour liquidations are down 74%, sitting at only 53 million. And of that 53 million, we see 27 million longs and 26 million shorts. Immediately, this tells us Bitcoin has done pretty much nothing but push sideways. We are in this very tight range and incredibly choppy zone. So again, weekend price action, we have a reduction in volatility, a reduction in volume as a consequence, and of course with that we see a reduction in liquidation. So taking a very brief look at that 24-hour price action, we can see over here on the hourly chart, Bitcoin has more or less just been pushing sideways, retesting this higher level of resistance, or that first level of resistance, ever since we retested and bounced from our major area of support. This first level of resistance was acting as a support prior to the breakdown a couple days ago. So we can see we've come back and retested this range. We'll come back to Bitcoin in just a moment. Moving over to the DXY. The DXY actually closed out its daily a little bit red that last day of the week, and we have seen again a little bit of exhaustion play out at this range of some quite large wicks toward the upside, and now of course we have turned red, coming back down to retest this major area of support as well as that 50 EMA. We do have that daily uptrending support line as represented by this diagonal trend line. A loss of this diagonal trend line will result in a correction for the DXY, potentially all the way back down to 100 and 1.5. This will be very bullish for stocks and bullish for cryptocurrency. Until then, we do have the potential for a bounce and continuation upwards. However, this structure over here is very reflective of a rising channel formation, which of course, as we would know, is an exhaustion pattern. So we have broken out of this downtrend. However, the price action looks like it is starting to potentially exhaust. So we could see that downward move incoming. Looking at the S&P 500 closing out that weekly candle, incredibly bullish, closing above the prior opening price of the last red candle, which was this one over here, sitting around 4,818, sorry, an incredibly amazing breakout over here of that local high range, and of course that weekly candle close, just showing how strong the stock market is right now, continuing to highs. We're looking at a target of 4,900 and looking at a target of 5,000 in the new week. Looking at the Dow Jones, not as strong as a break as the S&P, but still a very important break, as we did break above that prior high we printed at around 38,000. So breaking above 38,000 will result in a continuation upwards. We are still looking for that continuation upwards now, provided we hold above that 38k level, as this area now is going to be acting as a short-term support. As always, breaking below the range low will result in a continuation downwards into our higher time frame level of support, but until then we are looking for a continuation up. So overall, the markets are shaping up for a potentially bullish week. So let's talk about how this could impact Bitcoin and what we will be expecting from Bitcoin moving into the week. Let's go ahead and jump in, but before we do, a quick word from Bitget and BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump over to Bitcoin. So like we said, a potentially bullish week shaping up for Bitcoin, as we are seeing the traditional markets move up, and we potentially will be seeing the DXY come down a little bit. But more importantly, let's take a look at the key levels we are watching for Bitcoin, the key trends, and of course, the trigger points for a continuation upward or a continuation downwards. So let's start off with the easiest one first, and this is going to be a continuation upward. The reason I say this is the easiest scenario, as we have very clear validations for when we do trigger these upward trends, and the downward move is a little bit more speculative in terms of how low Bitcoin could theoretically go if the lower level of support is broken. So let's talk about the possibility of an upward move first. At the moment, Bitcoin has retested and bounced from a major area of support, which is going to be this support level we've identified. This is also a bearish trigger point, so we'll come back and discuss it in a second. Simply means if we lose this area of support, the trend will continue downwards aggressively, okay? We can also see the VRPV. We have a significant gap over here between 40,000 and 38,000, indicating this range could be easily filled with an increased amount of volatility if we do break downwards. Again, we'll come back and discuss that all in a second. The point of telling you that now, though, is to really lock in the significance of this support level. The support level that we retested was the price range between 40,600 and 40,250. It is kind of that last line of support between where we are now and a potential 40,000 to 38,000 retest, which is going to be this next high time frame level of support. If we zoom out on the 3-day chart, we can see just how important this level is. We can see right over here a significant level of support that we potentially will come down and retest if we lose this short-term level of support. So as we're going to see this short-term level of support has provided support now for just about 4 weeks. We retested it a few times back in early December. We retested it once in early January, and the last couple of days we came down and retested it for a couple of days. We can see how massive this level is in terms of liquidity and in terms of structural significance. So the trend at the moment, guys, is very, very obvious on the larger scale. When we come down and retest the area of support or resistance, the moment we retest that, that is when we either get a breakout or we get a rejection. In this instance, we had a rejection. If we flip the chart, we had a bounce. So the trend is currently upward. The trend is expected to continue upwards, as we discussed, until we reach two things. Number one, a major area of resistance, or number two, a major sell wall. These generally happen at the same time. So when there's a large amount of sellers in the market, they generally are forming that resistance. So it's not like they're two different things, they're kind of the same thing, but they are different, but they're kind of the same. So let's go ahead and take a look. The next level of resistance that we are retesting is the current level of resistance that we are retesting. This is going to be the area between 41,800 and 41,600. We can see we've retested this multiple times as support in the past, and we are now coming up to retest this as a resistance. So we had a bounce from this low range that took us up to a nearest resistance. This is where the trend becomes a little bit more indecisive. A break through this resistance will actually continue this uptrend from this low into the next range of support, into the next range of resistance, which we are expecting to be at the POC level, which is 42,600 to 42,700. This POC level, this red line, is where we expect the price to go upwards to if we can break over 41,860. If we get up to this level, again, we'll be challenging a smaller amount of resistance. Only difference is we'd have a short-term support below us to facilitate a continuation upwards to our next level of resistance, which is sitting at $44,500. The $44,500 is a major area of resistance, which again, we retested it numerous times until we finally broke above it, and that resulted in a continuation upwards to 46 to 48,000. So a break over this upper level of resistance will likely push Bitcoin's price action back up to retest this 45.4k level, which is the trigger point for a 48k retest. So to summarize it again really quickly, at the moment, we have bounced from a major support, and therefore the trend is in a uptrend. The uptrend is likely to continue until one or two things happen. Number one, we reach a major level of resistance and we are unable to break past it. And number two, the prior level of support that we bounced from is actually cleared as support, meaning the price action breaks back below it. Until then, the narrative should be that Bitcoin is consolidating, potentially in a bullish way, meaning we have bearish absorption, meaning the exhausting price is from the selling pressure. We are potentially having accumulation, or we potentially have a reversal developing on our hands. The question is, are we able to actually continue upwards through the resistances to facilitate that potential continuation and reversal upwards? If we break through this resistance, the next target on the higher time frame, we are looking at 44.5k. If we break through 44.5k, this area then comes support, and we look for a target of 48,000. Let's go ahead now and talk about the bearish case scenario. As we've said, there are 2 points that we are looking for that bearish case scenario to come in play. On the short-term charts, we look for a rejection of this level of resistance. A rejection of this level of resistance will likely push Bitcoin back down on the short term, either to retest this level of support or to create a higher low as opposed to our prior low, and then the trend will continue upwards. But the main level that we are looking for is going to be this massive area of support. A loss of this area of support, again, pushes Bitcoin underneath the midline of the Gaussian channel on the daily and pushes Bitcoin into the first, this is number one, the first of three, so number two and number three, major areas of support on the higher time frame. These major areas of support on the higher time frame each hold slightly different significance. A breakdown of number one, meaning a loss of number one, a loss of 38k, actually puts Bitcoin into a weekly downtrend. Okay, we enter a weekly downtrend. We have been in a weekly uptrend ever since we broke out of 19k over here. We've been in a monthly uptrend ever since we broke out of 32k. We've been in a yearly uptrend since we broke out of this level, and this is going to be our multi-year uptrend if we break above 48k, entering again the next bull run phase. At the point of rejection, we entered a daily downtrend, okay? A loss of the 38 to 40k level enters a weekly downtrend, and a loss of the 32k level enters a monthly / yearly downtrend. So these are the key levels and trigger points. So we definitely do not want to be dropping too low on this pullback. Ideally, we don't want to be dropping underneath 38k, and absolutely, ideally, we do never want to see a candle close underneath that 30.7k level, as we will be breaking below a major monthly support, as well as that yearly diagonal uptrending support line that we've held again for basically the entirety of 2023. So if we do see a correction, guys, the most likely move is going to be into this range, the number one range, which is going to be between 38 to 40,000 on the short-term charts. Once more, it is going to be reflected as this 38 to 40,000 range. We do have that massive VRPV gap over here, so it's very likely if we do lose this lower level of support right over here, we see a significant increase in volatility, and we will likely see quite a violent move toward the downside. Not violent in terms of how low it will go. It will probably only go to around 38,000 max, okay? But violent in regards to velocity and the actual speed of which that move will actually occur. We expect that to be quite a volatile move, quite a fast move, and quite a high liquidation move if it does actually occur. So, to summarize everything, guys, and to put you on your way, at the moment, Bitcoin is looking bullish, okay? It's looking bullish on the macro charts. We are exhausting on the daily. We're being exhausted on the weekly a little bit, but you are still moving into an area of support. And it's only normal to start to see some degree of exhaustion as we reject from a massive high time frame resistance. The importance is that the exhaustion that is present on the technicals do not result in the price structures breaking down, okay? So the most important levels are going to be our actual levels of horizontal support. Provided these areas remain as support, it doesn't really matter what the technicals are suggesting, okay? The price action will likely find support and then bounce upwards. At the end of the day, those technicals are going to be lagging on a higher time frame anyway. Moving back to the short-term time frame, guys, if you want to flip the chart to help your bias, you can see we've had rejection here, rejection here, rejection here. Perfect. We are now rejecting from here too. So the only logical direction is going to be back downwards, provided this area remains as a resistance. If we break above this resistance, then we expect a breakout of this range. This is a 1 month long resistance. We then expect a continuation upwards of Bitcoin. This, of course, at the moment, provided and based on the fact that we have bounced and support, is the least likely scenario of the two. However, it is still a scenario you have to be aware of, so you can prepare and plan for it. What does that mean for you right now? It means two things. Number one, we have to identify and be very much aware that the price action is in a chop zone. We are in a chop zone. What does that mean? It means you should not be trading with too high risk. Again, you have to consider your risk across a collective amount of positions. If you have a risk tolerance of $400 at any given time, whether or not you take one position or 10 positions, the total collective loss over all of the positions you have active should not exceed your risk tolerance of $400. Okay, a lot of people think I can have a risk tolerance of 400. They put $400 in every trade. They end up overexposing themselves to like 50 trades, and they lose a significant amount of money from one move in the market, okay? Any particular move in the market, any particular time in the market, your risk exposure should not exceed your max desirable loss. And if you have more than one trade active, then you split across your risk exposure across however many multiple trades you have at the time. If you see a trade that you want to take, but you have exceeded your risk tolerance, you do not take the trade, okay? Remember, trading is very much more about risk management than anything else, guys. If you have adequate risk management and you're putting yourself in favorable positions based on proven strategies, it doesn't matter what the result of your one trade is. It doesn't matter what the result of your weekly trades are. It matters what the result of your monthly, your yearly trades are, because overall you will come out on top if you follow a proven profitable strategy that you've developed, and not these ones on YouTube, not these crazy ones, 200 moving average across, blah, blah, blah. They don't work. Any strategy on YouTube that you see, I'll give you $100 right now if you can show me a strategy on YouTube that you've forward tested for at least 2 years that works. It won't happen. It won't happen. You won't see it, guys. It doesn't exist. The strategies you see on YouTube, often they use very, very tight validations with very specific entries that require, immediate execution, that you need bots, all that stuff to actually execute. And even then, your profitability factor is not only super low, but your overall net profit over a very long period of time and a high sample size of trades are very low. You see a lot of people editing their trading softwares, or they edit the Pine script editor to find the most profitable strategies in terms of percentages. A lot of these are based on lagging indicators, which give different values in the past than they would in the future. So it is all very misleading. You have to understand trading is not just finding the golden rule. If you do not know how to trade yourself manually, if you do not know what to look for, if you do not know what things mean, if you do not know how to execute proper risk management yourself manually, how do you think you're going to code a bot to trade for you even better? Because at the end of the day, all it is when you code a bot, you're telling the bot what you know, and you're getting that bot to do what you want it to do. So if you don't know what you're doing, the bot's not going to magically know what to do, and thus your trading strategy is not going to work. So keep that in mind, guys. Thanks for watching. Hope you have a fantastic rest of your day, and I'll catch you guys in the next one. Cheers.